The market action at the end of last week indicates that globally, share markets have entered correction mode. Now, how long or how far or how deep this correction may be is still a very open question, but it's very clear from the action we saw starting in the Asia Pacific region, trading through Europe and into the US, that investors are nervous about valuations and in particular the short-term outlook for share markets. And we saw some very heavy selling, particularly in Europe, with the DAX, CAC and the Italian MIB index all down by 2 to 3%, and a similar impact on the US NASDAQ and trading on Friday night. The Dow Jones Industrial Average and S&P 500 being broader and more narrowly focused respectively, meant that they escaped a lot of the selling that was naturally focused on those high-flying, high-growth tech companies that have dominated the run-up in the market. And that reversal of interest saw them the hardest hit on Friday night, with internet and software businesses leading the market lower. So investors have questions to answer for themselves. How far do they think this will go? At this stage, the clear downward momentum suggests it's not over, but we have seen dip buying rewarded many times over the last 2.5 years, and the dip buyers could move in at any time. Some of the notable declines over the week: Coinbase down 20%, Apple was down 5.5% or thereabouts, and Amazon was slammed on Friday night despite what looked like a good quarterly report last week. It had reported revenue up 17% for the same quarter last year, and that sort of growth is pretty solid in what is a very well-established and mature business. So after an initial positive reaction, Amazon was sold off by 8% in trading on Friday night, just at the moment suggesting being in the spotlight's not necessarily a good idea. There are exceptions, of course. This chart shows the first 2 days trading of Figma, the software group that debuted last Thursday in the US. And as you can see from this chart, it's taken off. It's up 270%. As at the close on Friday, having traded higher. And it does go to show why IPOs are so popular with investors. eBay also had a good week last week, in another exception, up 13%. It does appear that its domestic situation, as opposed to the international one, is a big advantage for it in terms of how investors perceive it. So we've got plenty more reports coming up this week. Palantir, AMD, Disney, McDonald's, Eli Lilly are all reporting this week, and that focus on the micro might bring investors back to the market, because it was the job numbers on Friday night that really focused attention on concerns. And although the selling started before they came out, the non-farm payrolls number was weaker than the market expected. Now, that immediately led to speculation that there would be lower interest rates, and we saw interest rate markets moving in that direction, but that wasn't enough to stop the selling on Friday night. However, some of these reports coming out are some of the largest companies in the US, and if we see further good reports there, we could see some support come back into the market as soon as tonight. So one to watch out for. Overall, the reporting season has been a positive. We've seen about 8% growth in revenue across the 330 companies of the S&P 500 that have reported so far, and that's translated to about a 5% growth in profitability. And that sort of a quarterly result does speak well to the outlook for the market. However, it's very clear from the action we saw on Friday night, there are still some concerns about inflated or stretched valuations. We do have also the new tariffs that were announced last week coming into effect on this Thursday. So that's one to watch out for. That's a macro threat to the health of the markets. And if investors focus on those tariffs and their potential to spark inflation and slow down global trade, we could see further negative reactions at the back end of the week. In Australia, we've seen a more resilient performance, and despite the fact that the Hang Seng was down 3.5% last week and the S&P 500 down 2.5%, the Australian share market was flat. Now, to some extent, this does reflect the composition of the market. We've 2/3 of the Australian market capitalisation is occupied by banks and miners, and they're simply not exposed to that high growth, high-tech fever that has driven a lot of investment over the last 2.5 years. And so we're not being sold down as hard now that that cycle appears to have reversed, at least temporarily. There's a bit of an energy focus this week. Now, late last week, an idea started to be floated that the Abu Dhabi National Oil Company's bid for Santos at $36.4 billion, the largest cash bid ever entered in the Australian market. There's some talk that it will face Foreign Investment Review Board approval problems. And the idea has been floated that Beach Energy might get involved in the mix somehow. And so here's the chart. We'll have a look at Beach itself, because the market really is concerned about this outlook. And it makes sense that the market should be concerned. Beach's market capitalisation is $1.1 billion. So even if it were to only buy the domestic assets of Santos, it's looking at an acquisition of around $2 billion. And that's a hard ask, let alone the idea that it could somehow take over the whole of Santos and split it up. So Beach shares are being sold down. It's possibly because investors are anticipating that Beach will need to raise money to buy assets as part of this deal. I'm not sure that that will come to fruition, but it does reflect the fact that we do have quite a focus on energy at the moment, and a lot of it is negative. Boss Energy, the uranium miner who had to revise down all of their estimates last week, finished the week down 50%, and that seemed to have a halo effect on the uranium mining sector. Deep Yellow down 16%. So we'll be looking to Beach. Beach actually reports today, so we'll also be looking out for that report. But in the context of the takeover bid, I'm not sure that it will have a big impact. But we'll be looking out for retail stocks this week. JB Hi-Fi and Temple & Webster both reporting, as well as REA Group, Car Sales, AMP and Block.